Hello, my name is Matthew Brett and I'm the manager of the Baillie Gifford Japan Trust. I want to give an update following the Japan Trust full year results to the 31st of August this year. Over the year, the net asset value total return was 20.9%, well ahead of the benchmark Topic's total return of 16.3% in sterling terms. There are plenty of long-term comparisons in the annual report, but since it's the Japan Trust's 40th year anniversary, I thought it might make sense to look back over how things have gone over the full 40-year time period. Since inception, the net asset value total return has been 10.6% per annum, which compares to the Topic's total return of 4.7% per annum. Now, obviously, past performance is not a guide to future performance. Turning back to the recent past, the largest positive contributors to performance over the year came from physical world businesses, while negative contributions came from the internet area in the main. Business conditions for physical world businesses improved significantly from the very difficult time that they were having in the early phases of the pandemic. Outsourcing, a staffing company, was the leading contributor to performance. This is run by the energetic Mr. Doi, who has been growing and internationalising the business over time in an effort to reduce its sensitivity to economic shocks, and that seems to be working. Other significant contributors included Raxel, which does logistics and printing, Denso, which is Toyota's electronics parts company, and Mizumi, which does dies and small parts, also Topcon, which does positioning systems, all of which are clearly physical world businesses. Significant negative contributors mainly came from the internet area. The share prices of these businesses had generally been good performers in the previous year, as they were resilient to the challenges of the novel coronavirus, and in some cases even benefited from increased demand for their services. But this year they were generally eclipsed by the rapidly improving profits for the physical world companies. Throughout this period, corporate Japan has shown admirable resilience. Japanese companies have continued to pay good dividends, representing a significant improvement from their actions during the global financial crisis, when there were some quite significant dividend cuts. Although it may seem surprising in the midst of a global pandemic, the income of the Japan Trust has continued to grow strongly due to the efforts of the underlying companies. Therefore, the board is recommending a final dividend for this year of 6p, representing an increase of a third on the dividend of 4.5p last year. In the last 6 months, we took just 3 new holdings in line with our long-term investment philosophy. These are Unichar, which does nappies and sanitary products, Base, which does e-commerce software, and TKP, which does serviced offices and conference rooms. Although these companies have many differences, they each share the feature of significant inside ownership, with either the family or the founder having between 15% and 50% of the shares outstanding. We believe that this alignment helps to ensure shareholder interests are high up the priority list. We continue to be really excited about the prospects for internet businesses within Japan. And large holdings within this area include SoftBank, SBI, GMO Internet and Rakuten. And also we continue to have a good exposure to robotics and automation related companies. So here top holdings include Fanuc and Mizumi, and also within the related agricultural mechanisation area, Kubota. So in summary, last year the Baillie Gifford Japan Trust delivered an NAV total return of a little over 20%. The board decided to recommend increasing the dividend by a third, and we remain really excited about the prospects for growth investing in the Japanese market. Thank you.